Corporate governance is all about managing ethics and transparency while doing the business. Of course, business can be done in any of the approaches taken, but each of the business has its own responsibilities to its stakeholders, its employees, and the society. So it is necessary the business runs in an ethical and transparent way. Following these practices internally is going to help bring in as accuracy in the number in financial statement, taking the right approaches while preparing the financial statement and feeling responsible with each of the number that's been indicated on the financial statement. How is this going to help? When you are providing a financial statement to the stakeholder, if your financial statements are reliable, stakeholders will want to go through that and base their decisions on the numbers provided by you. Should your financial statement unfortunately not be reliable, they'll not even wait for your financial statement. They'll go ahead and make their decision. They'll still be fine not basing the decisions on your number. Probably they'll feel safe about that. It is responsibility of each of finance professional to ensure that each of the entity they are working for adopt corporate governance measures and also ensure entities financials are in adherence with all the required accounting standards, accounting guidelines, and they are always reliable source of information to users of the financial statements. That leads us to the next slide about reporting standards. Each of the entity can report its financials in a way it wants, just the way MIS are done, which are more object oriented to feed in the information to the management. However, think of a situation where financial statements are presented in their own way to all the external users of the financial statement. One of the entity may be calling it sales as revenues. One of the entity may be misclassifying its indirect income as revenues. But the user of the financial statement will not be aware of all these practices. It will be misguiding for him to make any of the decisions. These challenges are much more wider when it comes to using financial statement of an entity which is in a different geography, different economy, because it would be basing its financial statement on the rules, regulations, and usage requirement of that environment. This is exactly why international financial reporting standards are established, and now most of the countries competing in international market have adopted international financial reporting standards as the base for their financial reporting, or have aligned their reporting standards to match with international financial reporting standards. Accounting boards in each of the states and countries have declared their own reporting standards and gaps about financial statements and the disclosures. And the efforts are continuously to align all of these with international financial reporting standards. There still can be chances of any of the reporting standard not being aligned with international financial reporting standards. The standard practice in such instances people follow, or they call it out. They declare this part of my financial is not aligned with the required guidelines of international financial reporting standards. Talking about future of financial reporting, as you are seeing, AI and machine learning are taking over most of the activities. So are financial reporting too. There are very stronger tools which have come out these days, which can pull the information from your financial management system, combine them with various other sources of information, and produce most useful financial reports. AI also is very helpful in quickly analyzing the trends and giving you heads up about what a user of the financial should be seeing in the financial statement and what they should expect in future. So what's the future in that case of finance professional? Finance professionals should now grow beyond just submission of the report or drawing typical analysis. Their skill sets should now be progressing towards adding that extra value to the investors, helping them make that strategic decisions based on the information which is already available. This is an advantage to all the finance professional, where they don't have to sit and prepare the financials, make those analysis, and then go to the stakeholders. Information directly are available on the desk. Start adding that value. Partner well with the stakeholders in making those strategic business decisions. In this video, we saw about balance sheet as of a given date, profit and loss statement for a given period, notes on accounts explaining about all the policies and procedures and standards adopted while preparing the financial statement, statement of changes in equity, which explains about the changes in the equities of the shareholders or partners, and about the cash flow statement. Further, we saw how corporate governance can impact the financial statements and what are the responsibilities of finance professionals in adopting the corporate governance. We also discussed about how AI and machine learning are impacting preparation of the financials and what should professionals be now growing towards. Friends, I hope this video was useful for you. Please share your feedback. Like, subscribe, and encourage other interested people also to watch the video. Thank you for all your support. And again, I'm all ears to hear more from you. Have a good time.